Okay, it looks like attendees have stabilized. So welcome everybody to this afternoon's webinar. Again, that's the Ocean and Air Freight Rate Tracker Outlook webinar for Q3 2023. Today, we're really going to be taking a deep dive on trends and developments and dynamics within the air and ocean freight rate markets, and trying to show exactly where we think the market is moving to, what the data shows us, and what the future holds for rate development over the coming quarters. Obviously, we're seeing a situation with both the air and ocean freight markets fairly depressed from a demand point of view at the moment. In the last ocean freight webinar, we were talking all about how we thought the market had hit its sort of trough, it had bottomed out, and trying to work out and predict when we thought prices and volumes might pick up again. So in this webinar, we'll be looking at that. We'll be assessing our predictions and what we thought the growth pathway would be back into market growing again in 2024, and seeing if anything's changed in the data to suggest otherwise. We have really began to see, although prices are still lower, a slight uptick and maybe more stable volumes as well. So there does seem to be some signs of change in the ocean freight market now. On the air freight side, of course, we're still seeing prices slipping there, largely driven by the dynamics on the capacity side, with the passenger market, of course, recovering and more belly freight capacity coming in. So we'll be delving deeper into that and looking at the growth trajectory on that side of things as well over the coming quarters. The webinar, just with the previous webinars, will be about 30 minutes long, and then we'll have a Q&A session. It will split into two parts. The first section will cover the ocean freight market, and then the second section will look at the air freight market, and we'll run through the data on all the key metrics in the first part, and then we'll have a look at the outlook for both the air and ocean freight market at the end of each section. We will be running a poll for your own expectations for air and ocean freight rate development at the end of each section as well. So please be prepared to use the poll app for that. And obviously, if you've got questions that you'd like to ask at the Q&A session at the end, please feel free to use the Q&A app to ask those at any point during the webinar. Last thing to say is that, of course, most of you will probably already have the air and ocean freight tracker documents. We published the air freight tracker just this morning. But if you haven't, you'll receive copies of those reports after the webinar. You'll also receive a recording of this session as well, if you want to share it with colleagues or you wish to review it again. So I'll move on now to introducing our panelists. So I'm joined today, I'm Michael Clover, by the way, the host from TI, which is delivering all this data and insight for you today. But I'm also joined by Vicky Goroska, TI's freight team leader, who's responsible for a lot of the analysis of the air and ocean freight markets we provide here at TI. Hello, Vicky.
Hello, everyone.
Thank you. And we're also joined by Janan Hassan, who's one of TI's economists, and has been instrumental in developing many of the data sets, indexes for this particular report, and we'll be offering her views today. So hello, Janan.
Hi, everyone.
Right. So we'll move on now to the main session. This is the first chart we'll be reviewing today, which is the Ocean Freight Rates Index. And this shows you development in all rates around the world in the ocean freight market. And obviously, we can still see the huge trend that we saw with the spike in COVID and the subsequent fall. But Vicky, could you just give us a bit of background about where we are with the market now and how we see it developing in the short term?
Yes, of course. So as you can see from this chart, it appears that the ocean freight market is returning to normal when it comes to rates. And some of the more recent short-term trends actually suggest that rates have bottomed out at the start of Q2 this year. And what does that mean in monetary terms? It means that it now costs almost $6,000 less than a year ago to ship a 40-foot container, and over $12,000 less than August 2021, when, as you can see from this chart, rates reached their peak. And then with regards to the head haul index, it reached its lowest level in July 2023, but then increased in August, which is actually the first increase we've seen since March 2022. And then the backhaul index is slightly different because it still continues to trend downwards. So this means that if ocean freight rates have truly bottomed out, it means that it's a good time for shippers to negotiate new contracts and to lock in favorable rates. But yeah, there's a lot of uncertainty, so we just need to keep watching the data for the next market moves.
Yes, thanks, Vicky. That's what it's all about, really, is just looking at when that upturn is going to come, which we will come to at the end of the ocean freight session. So that's the overall global index, and of course, just to mention that we also provide regional data and regional indices. All of that is available through TI's subscription-based database, the Global Supply Chain Intelligence platform, which gives you the regional data and analysis, as well as all the underlying data as well. So if you're interested in seeing more granular data, then please do get in touch with us about that platform. Now we're going to take a look at what's really driving rate development, and we'll pass through a number of different metrics here. But first of all, we'll look at demand and particularly volumes. And Vicky, could you just explain the chart and the trends we're seeing here?
Yes, well, volumes are increasing. They have increased in second quarter this year, and this growth was mainly due to port volume growth in North America and Asia Pacific. Whereas European volumes continue to fall because, as we know, persistent inflation keeps eroding consumer spending power. But I'd like to also mention that this rebound, the slight uptick that we're seeing in volumes in the second quarter, is not that surprising because it's quite common actually for volumes to rebound after the post-peak dip in the first quarter. And then overall, this data shows that demand is still below historic levels, which means that rates will continue to stay low, and there will be very little demand side pressure on rates. And then another point to make when it comes to volumes is the increased spending on services, which is having a significant impact, obviously, on volumes. What has happened here is a shift in consumer spending habits and consumer spending behavior, in that US consumers are spending more on services now. And the type of products that characterize the high demand that we saw over the past a couple of years, such as furniture or electronics. So these product types have seen modest falls in sales and in the US, and this is obviously having a significant impact on inventory levels.
Mm-hmm. Yeah, so even that change in behavior is limiting demand a bit further.
Exactly.
Yeah. Brilliant. All right. Well, let's then move on a little to look at the other side of things, and we'll look at capacity here as well. Obviously, an important governor for pricing. Obviously, there's a stark trend there in declining capacity, but we're seeing a change now. So, Janan, would you take us through, the recent developments and uptick there?
Yes, of course. In quarter two, the global capacity of the ocean freight market decreased in 4% compared to the same quarter last year. This trend suggests that capacity is on a recovery trajectory, as the weekly global capacity increased by 6% in July from its lowest in February. This can also be supported by the increase in Maersk utilization rates by 3 percentage points from Q1 to Q2 this year. Overall, we expect moderately growing demand to put an upward pressure on rates in the coming months, and pressure will loosen as new capacity hits the market.
So the overall sort of year-on-year trend is a lot of capacity being pulled out of the market, and we're now at a much lower capacity level, matching up with demand. But actually, recently, in the last few months and weeks, we've seen more capacity coming back into the market. Yeah, so that's probably a trend we're expecting to see carry on as demand picks up, especially as well. All right. Now, we also did this time around a little exercise just looking at market concentration, just to help understand how that's changed and the impact on the sort of pricing situation as well. Janan, would you just walk us through this one?
Sure. So what we did here is to measure the market concentration in the ocean freight forwarding market. We used our own sizes and share estimates to create Hirschman-Herfindahl index, or HHI for short. The more concentrated the market is, the more pricing power suppliers have. But overall, forwarders are losing market share. Shippers' utilization rates fell 4% since 2021, and that suggests a fall in demand and inability to maintain volumes, really. And while the revenues of top 20 companies in the last 2 years were rising steadily, I think we can attribute that to price growth rather than market share growth. The index value just dropped last year after reaching a 10-year high in 2020, as you can see. But the value remains below 1,000, which means the market's still considered unconcentrated. Lately, though, the market's become more fragmented with high levels of competition, and this is evidenced by shipping lines taking a more aggressive approach to pricing and flooding the market with new vessels to gain market share.
Yeah, absolutely interesting to see this from the forwarder's perspective rather than just on the ocean freight liner side as well. The effect on the market there. So thank you, Janan. And our next slide really looks at costs, and particularly of fuel, obviously a driver of pricing there. So this is one that Janan will walk us through again.
When looking at bunker fuel prices, we can see that there's been an overall increase in all regions. However, the region that saw the highest increase quarter on quarter was EMEA, with prices increasing 14% compared to the 12% global average increase. These strong prices have been driven partly by global sour crude tightness and OPEC production cuts. And compared to the same period last year, the prices have decreased by 6%, driving operating costs down overall, with carriers reporting consumption has decreased as well.
Thanks, Janan. So let's now dive into a little bit of what the future holds. That's obviously a good look at what the data is telling us about the market at the moment, but of course we're really here to work out what's going to happen in the future. So we have here our sentiment index, where we run a survey of hundreds of forwarders and shipping and shippers, to tell us about their expectations for the market. But we'd also like to hear about your views as well, as to what you're expecting ocean freight rates to do over the next quarter. So I'm just going to launch a poll here for you to ask you what your view is as to how rates will change in the coming quarter. But just while you're answering that, Vicky, could you just talk us through what the overall survey is telling us about participants' expectations for the next quarter?
Yes, so as you briefly explained, the confidence index is TI's quarterly assessment of the ocean freight market conditions, and we poll industry experts such as shippers, carriers, and forwarders, and ask them to share their expectations for ocean freight rates on various trade lanes. And with regards to the latest poll data, the index has fallen in Q3 compared to Q2 this year, and all trade lanes have moved closer to the no change area. So that means that the majority of industry experts expect rates to remain flat. So whilst in the previous quarter, in Q2, the most common response across all trade lanes was a slight increase in rates, this quarter, the majority of poll participants think that we won't see a change in ocean freight rates in the coming quarter.
Thank you, Vicky. And actually, that's very much borne out by the poll results we're getting through live as well. So yeah, 52% saying that they think rates will remain flat, 24% saying decrease somewhat, and 17% increase somewhat. But the majority certainly think polls rates remain flat, and very few people think there'll be significant change in the next quarter. And I'll just share those results as well, so you can all actually see them rather than just listening to me. But that's still in line. So I mean, it tells us really that the expectation of the market is that we're still in this sort of stable period where the market has somewhat reset, and that prices aren't expected to change a huge amount. I mean, interestingly, as well as the poll data that we're getting through for sort of August, September, if you actually look at the pricing data coming through in the last few weeks, there has been a slight uptick, fairly marginal, and actually a little dip in the last couple of weeks as well again. So not a huge change, but a sign perhaps that that conditions are sort of tightening from a pricing point of view as well. And that's sort of reflected in what we see with our outlook grid here as well for ocean freight. So we'll turn now to the outlook and expectations for the next few quarters. So this is TI's ocean freight outlook. This basically is designed as a way to show you our expectations for rate development, and it's based around all the data on the different pricing influences and weighting those to give us what we show as our overall rate outlook, and also taking account, of course, of what we see in terms of sentiment for pricing and industry as well. So we run through a variety of different metrics here and show their individual effect on rates, and you can see the arrows basically indicate what effect that will have on rates. So in the case of the top line there, you see operating costs going up, and obviously that would have an increase or an effect to have a upward inflationary effect on rates. However, you see it in contrast, you see a line like interest rates. That's obviously we see interest rates generally still going up around most of the world at the moment. We show that as going down because, of course, that has a low effect to lower demand, and therefore a deflationary effect on rates. So that's how to interpret this chart. And the smaller arrows show a less substantial increase up. The larger arrows show a more substantial or higher magnitude increase. So just a few notes on really how that chart works. But as you can see, basically the growth path we're expecting is that we'll see a slight increase in Q3 with seasonal effects, and also with slight improvement in the economic situation. But generally will remain flat after that, even through the peak season. We expect to see a drop off again in Q1 next year. And that's fairly seasonal. And then a relatively flat market still all the way really until the second half of next year in 2024. So that would be our expectations for the overall journey. But I will ask Vicky really to add a bit more about what we're expecting in terms of the demand picture over that period. So Vicky, if you could highlight a few key things you think about how demand's going to change over the next year.
Yes, well, I guess the most important thing are inventory levels, because they are a major driver of volumes. And in this regard, inventory overhang will continue to cause a drag on volumes and will therefore have a deflationary effect on rates. And also the change in the consumer behavior that I briefly mentioned earlier, and this increased spending on services that we're seeing will be one of the main reasons why inventory levels will remain high and in Q3 and will continue to dampen demand for ocean freight services. However, if consumption holds up, then the restocking activity should pick up in Q4, and that's mainly, as you said, on the back of peak season volumes, which in turn will put some demand pressure on rates. And then another positive factor is consumer spending, consumer confidence. So despite the recession fears, consumer confidence is starting to recover and is increasing. So that means that consumers are upbeat about the current and near-term prospects of the economy. So all of this points towards improved economic conditions and hence volumes. But then on the negative side, one demand side factor that we think could negatively impact trade and volumes in the coming period is trade restructuring, which we all know is well underway. So geopolitical tensions are negatively affecting trade, and these trade restrictions have limited export sales over the past 5 years or so, because countries are trying to build up their domestic capabilities, their domestic industry of essential products, semiconductors being one example, in order to protect themselves from international competition.
Yes, a very interesting point at the moment as well, with the sort of lower production levels and lower levels of economic activity we're seeing in China, the movement of production to other areas, making quite a big shift to trade patterns now. So thank you very much for that, Vicky. And Janan, would you just highlight a few key points more on the supply side for us?
Yes, of course. We've seen a trend in the past couple of years where container liners are oversupplying the market, and both leading container lines and medium-sized providers have ordered substantial new capacity, and this is only beginning to enter the market. So over the next few quarters, we'll definitely see more capacity. And in terms of bunker fuel, high demand for crude is going to result in higher prices and an overall upwards pressure in the medium term. However, since carriers are reporting decreased consumption of fuel, it's hard to gauge how much that will affect rates. Also, with OPEC constantly engaging in price manipulation in the volatile markets, it's not easy to consider what it would be in the long term, actually.
Yeah, so of course, plenty of uncertainty as always with any of these outlooks, but we try to give you as clearer a view as to where the data showing it going at the moment as we possibly can. So thanks very much for that. And obviously, again, if you want to see specific trade lane outlooks or analysis, then you can just get in touch with us then to access the full versions of these reports and access all the underlying data. So please reach out to us if you'd like to see that. Okay, well, that concludes the ocean freight part of our presentation today. We'll now move on to the air freight side, following largely the same structure. So we'll start off by taking a high-level look at air freight rates. As you can see from the chart here, slightly different story to what we've seen in ocean freight. And Vicky, if you'd like to take us through this one, please.
Of course. So global air freight rates continue to fall in Q2 and into Q3 of this year, and rates on both head haul and back haul have been falling month on month for 5 consecutive months now. So the picture in air freight is one of a steady decline, and this has been driven mainly by soft indifferent demand combined with strong supply, a lot of capacity, which is driving these consistent falls. And although this fall, the trajectory of the fall has not been steep as in Q1, this declining trend in Q2 has still been sustained, which is bringing the market to a position where rates are approaching their pre-pandemic levels in many markets.
Yes, thank you, Vicky. Yeah, so we're seeing very different dynamics on the air freight market, and we'll take maybe a look at volumes here as well. The story, slight uptick here. So that's the really interesting thing, is even if volumes are improving, we're maybe not seeing that in rates. Could you take us through that, Vicky?
Yes, so TI's Global Airport Volume Index shows that air freight volumes are down significantly compared to previous years. For instance, in June this year, global volumes were down 7 points versus June last year, and 13 points versus June 2021. And in the short term, volumes have trended downwards since March this year. And it's important to mention here that the fall that we're seeing in Q1 and Q2, the falls are not as strong as the falls that we saw in the second half of 2022. So that means that what we're probably seeing here is a gradual recovery from the falls in 2022. So that also goes to say that demand has not been as bad as anticipated. And the perception that the US was entering a recession has probably had an impact on the inventory policy among retailers, which have been more cautious with their inventory policies, and they have taken a more conservative stance when it comes to placing new orders.
So in terms of some of the sort of demand side and the volumes, maybe some of that is governed or influenced by behavior of the fears of recession or lower demand rather than actual lower demand.
Exactly.
Great, very interesting. So if we turn now to the supply side, particularly on capacity, big story really this for the air freight market, and influencing what's causing price is the capacity factor. So Janan, would you just explain this one for us?
Yes, of course. When looking at this capacity data from IATA, we see that available capacity is surpassing cargo ton kilometers, and it's continuing to increase. In Q2, the year-on-year available capacity increased by 10% in comparison to the same quarter last year, when it was only about half that. So it's safe to conclude that the weakness in air freights is not only due to the levels of demand, but also the levels of supply. One factor increasing ACTKs is belly freight entering the market due to large demand for passenger flights. So this year we saw periods where supply was increasing, but demand was shrinking.
Yes, thanks, Janan. It is an interesting question: are we going to carry on seeing this capacity improvement? Will the passenger market and belly freight keep dropping in, or is it going to be something which we're seeing peak, and perhaps there's something we can come to when we get to the outlook section as well. So again, we've done the same exercise with the market concentration study for the air freight market. Slightly different picture again here. So Janan, would you explain this chart for us?
Yes, of course. So we can see that it's a completely different story here in air versus sea, as forwarders are gaining market share. The market concentration has been on an upwards climb since 2019, rising a staggering 150%, reaching a 10-year high last year. But we can see that from 2021 to 2022, growth is stagnating. Despite some consolidation and M&A over the years, this is still a largely fragmented market. But during the pandemic, freight forwarders and cargo airlines benefited from a rise in demand for air cargo due to demand in PPE and pharma. The demand thrived because of disruptions in the ocean shipping industry and a surge in e-commerce as well. So this concoction of circumstances created an ideal environment for the existing forwarders who specialize in cargo to gain market share. But as the market is stabilizing, so is the growth in market share stagnating, basically.
Well, in theory, we would expect to see more pricing power for the major players now than we did before the pandemic. I suppose, though, we're seeing that not playing out on pricing just because of the capacity situation, so overwhelming any pricing power we may see there. So, but a very interesting thing to look at. And then we're on to fuel again. Some sharp increases by the looks of things coming on here in the last few months. So, yes, would you take us through that, Janan?
Yeah, so as we can see, the prices increased significantly by 27%. The region with the biggest jet fuel price spike was North America, with an increase of 32% on the index. This is not only due to Saudi Arabia's and Russia's crude oil production cuts, which totaled 1.3 million barrels per day, but also to the buoyancy of the Asia-Pacific air travel market. As with bunker fuel, OPEC production cuts continue to increase costs looking forward. But versus ocean, demand is relatively really inelastic with jet fuel. As we saw in ocean, shippers are cutting consumption, but that can't really be done with air cargo.
No slow steaming in air freight, not in the same way anyway. Well, very good, and good to see your expectations sort of from last quarter borne out, Janan, with the pathway of that growth. So, yeah, always good to see. So that brings us now again to the exciting part where we look ahead at the future of the market, and we've got the confidence, or basically the air freight rate sentiment index here. So again, I will open up the poll for you to ask what your expectations are on air freight rates for the next quarter. And while you're answering that, Vicky will just take us through what the main survey shows us on the air freight market.
Yes, well, the poll data for the air freight market suggests that the industry believes air freight rates have bottomed out and are expecting some level of rate increases in the coming months. on a global level, more than 1/4 of respondents expect a slight increase in air freight rates in the next 3 months. And then again, a similar response on a regional level. So a slight decrease was the most common answer across the 3 major trade lanes. So overall, it seems that industry experts are quite optimistic that economic conditions will improve.
Yes. So that's an interesting counter to where the rates seem to be moving in actual prices. But yes, perhaps we are reaching that change point. So I will end the poll and just share the results with you now. But it does appear to be quite mixed in terms of sentiment of our participants today. You can see that most people are either in the slight decrease, rates will remain flat, or rates will increase somewhat category there, but a pretty even split, around 30% for all of them. So our participants here not quite as sort of unanimous or quite as convinced in rate increases as the main survey participants were. So a fair bit of uncertainty there still in the air freight poll, but we can now move on to taking a look at our outlook grid and our expectations for rate development for the air freight market. So again, this is the air freight rate outlook grid. It works just the same with all the same principles as the ocean freight grid did in terms of how to interpret it. And again, if you want to get trade lane specific data analysis, then you can get that via TI if you want to talk to us about our online data platforms and reports. But this one looks at the global situation. And you can see here the pathway, of course, with rates still falling. We expect that to carry on for Q3, but we do expect an increase with peak season in Q4 as well, before a slight dip and then flatter period in start of Q2 for 2024, before rates begin to generally tick up again for the rest of the year. And that's the expectation of TI's pricing model. But obviously, there's lots of complexity within that. And again, I'll ask Vicky to lend her expertise to explain that on the demand side, first of all.
Yes, well, in terms of volumes, it's safe to assume that they'll remain stable over the next 2 quarters. But we should also expect a muted peak season, especially if the US enters into recession. However, if the US fails to enter into recession, we might see a sudden uptick in demand prior to Christmas. And it is this uncertainty about the economy, especially the US economy, that could actually favor demand for air freight services. Because if demand around Christmas is stronger than previously anticipated, it means that retailers will try to increase their stock levels rapidly, which obviously will drive strong air freight growth.
Yes, absolutely. So if everyone rushes in to need more stock suddenly as demand picks up, then there will of course be the need for air freight's short lead time. So absolutely, that could be an interesting dynamic that plays out for us. All right, and on the supply side, Janan, would you just take us through some of the key points driving the sort of rate development scenario we're showing here?
Yes, of course. So in regards to capacity, possibly carriers may react to market signals and moderate. However, most of the new supply is entering the market right now is belly freight. So the increased supply in the market will continue to have downward pressure on rates. In regards to inland warehouse capacity, warehousing costs have been rising steadily, and they've been driven by tight vacancy rates and persistent inflation, particularly in Europe and North America. So we expect an upwards pressure. And in regards to fuel, in this economic climate, it's supposed to be a significant operating cost, making up a whopping 30% of total operating expenses, according to IATA, versus 24% in 2019.
Yeah, so that's having an outsized impact on overall cost base, I suppose, which should sustain rates at a higher level than they otherwise would be. There's an interesting point about some of the related logistics costs as well around the air freight operation and how that's going to increase costs as well. And actually, if you would like to learn more about the dynamics in other logistics markets like the warehousing market, there is a similar report to these air and ocean freight trackers available now for warehousing, which assesses all of those issues in more detail. So again, you can access that via TI's online platform, and there's a free version available on the TI website as well. All right. Well, thanks very much for sharing your views, Janan and Vicky. That actually brings us to the end of our presentation phase today, and moves us on to the Q&A session at the end. So please do feel free to ask any questions. If you've had any questions occur during the course of the session, please enter them into the Q&A tool on the Zoom app now. I will just start us off with a question about capacity, and that is just asking whether or not we think that belly capacity has sort of peaked in terms of how much capacity it's adding to the market now as we move out of the summer period, or do we expect that trend to carry on? So, Janan, do you have a view on that?
When taking into account pre-pandemic levels, we've just now returned to suppose normal amount of flights since 2020. So this might be a new normal. However, you're right that there is an effect of seasonality here. So we just passed the summer period, and probably belly freight capacity will decrease in the coming 2 quarters, but it won't necessarily fall as much as to reach levels from last year.
Yeah, so we expect to see a sustained level of that. Okay, very interesting. And we've got another question here just coming through. This one's asking about contract trends. So are shippers still engaging in long-term 12-month agreements with carriers, or is the trend for shorter? Is there a trend for shorter agreements? And Vicky, maybe that's something we could draw on the freight procurement survey to provide some insights on. But what do you think is the trend there?
Well, the trend was definitely toward signing shorter term contracts, and we've seen this over the past couple of years, and it made sense back then because of the volatility in rates that we saw. So I think in the long term, we will see a reversal of this trend. So we might see shippers signing long-term contracts, and we've seen that especially on the carrier side, they are pushing more towards locking shippers with longer-term contracts. So companies such as Maersk have been doing that for a while, same with the CMA CGM.
Yeah, so a few changes there. Just to mention, we will have our new freight procurement survey published in October this year. It's actually open, the survey now, so if anyone wants to go in there and express and share their views on freight procurement trends and attitude and plans for contracts, then please do participate in that survey. It's very interesting to see how the market is moving there. Okay, I guess obviously one really important factor we've spoken a fair bit about already during this webinar would be to look at fuel, and I think you've explained the effects you expect that to have on the air freight market quite well, Janan. But do you expect to see the fuel providing continuing to be that higher share of the cost base, or do you think that's something that in the long term will return to a more normal level, or level perhaps we saw prior to the pandemic again?
It's very hard to gauge long-term effects of fuel prices, to be honest. However, right now it's worth noting that the price is artificially high due to production costs. So I guess whenever geopolitically suits them, OPEC will just loosen its tight grip on production, and we might see a flood of oil in the market and driving the price down. However, in both markets, we see a move towards a greener, more efficient way of logistics. So it's it's hard to tell. However, in the medium term, price will probably go back down.
Good. All right. Well, thank you, Janan. All right. Well, that I think brings us to the end of our session today. So thanks very much to all of you for joining us and participating in the webinar today. It's good to have you on board again. And of course, we hope to see you in the Q4 webinar in a few months' time. And thank you especially to my colleagues Janan and Vicky for their participation and sharing their views today. That's very much appreciated. And just remains for us to say goodbye, and we hope to see you next time. Bye.